Why is it that almost anyone in the space right now is so salty while Bitcoin is at 85 or 90K?
I can't explain why people are salty. I can say I am not salty in one iota, right? If I answered very simply, because they're measuring just like you did, you're measuring Bitcoin from a piece of paper versus what Bitcoin actually is. And so your reference frame is a piece of paper, and you're only happy if that reference frame is going up relative to the piece of paper. But if you actually understood what's actually happening in Bitcoin and how fast it's expanding and what the emergent properties of it are becoming, you would not be salty at all. You would be feeling incredible.
Jeff Booth turns up the heat on panic sellers. Bitcoin is down, bearish, red candles everywhere, and the vibe is horrendous. And that's exactly why Booth's take hits like a punch to the chest. He basically says the reason everyone feels salty right now isn't because Bitcoin is broken. It's because you're still measuring it in dollars. The same dollars being printed, stretched, diluted. So when Bitcoin drops in price, you feel like you're losing, even though the entire fiat system is quietly cracking under its own weight. First trap, it's just technology. If that's your mindset, every dip feels like proof that something newer and shinier will replace it. So you start chasing the next coin, the next upgrade, the next promise. But protocols don't get replaced like apps. The strongest base layer wins, and everything else builds on top. Second trap, it's just an asset. Digital gold. Cool story. But if you're still thinking in gains and losses measured in a broken monetary system, you're judging the escape vehicle by the price of the burning building behind you. Then comes the shift. Bitcoin is a protocol. Like the internet's foundation. It's decentralized, layered, and built to outlast noise. Lightning scaling solutions, that's infrastructure forming, not hype collapsing. So maybe the real question during a bearish market isn't why is price down. Maybe it's this. If the old system is unstable, why are we so desperate to value the new one using its ruler? Let's watch clips from Jeff Booth's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
This is actually why, for me, the question is really a difficult, and we have to break down the question and understand what it would look like.
Sure.
Right. So, because you're comparing Bitcoin to a whole bunch of other things, right? And so let's use that analogy, and let's go through that analogy of your frame of reference on what Bitcoin is. And how your frame of reference would determine that outcome or your view of what reality is. So let's imagine your frame of reference is Bitcoin is a technology. And if Bitcoin is a technology, that frame of reference would have you constantly looking at the next technology that would replace Bitcoin. And from that point, and that would be a normal thing to think, right? Because most technology moves, and technology is a winner take most until the next technology replaces it, until the next technology replaces it. So you'd fall into traps of Bitcoin's slow, can't do these things. It's open, so it's no privacy. You'd fall into these traps that would take you to other coins, right? So, but it would be a totally normal frame of reference, right? Because we see technology more often than we see protocols, right? So one frame of reference, it's just a blockchain, it's crypto. Crypto is the same as Bitcoin, and there's 10 million Bitcoins. And that would be normal from a whole bunch of people measuring something new that they've never seen before. So not right, not wrong, just normal. Fair? Now take a different frame of reference. Bitcoin is an asset, and that frame of reference it's a better asset than gold. Gold is a better asset than Bitcoin. All of these fundamental frame of references would compare things inside that frame of reference, measuring those things from a piece of paper. And where did the piece of paper achieve its value? So if you just say, what is an asset? An asset is everything we've ever been able to measure because money was broken. We couldn't store our money in money. So we put them in assets those assets became centralized over time and then changed money. So gold constantly rebased or got stolen from you because it's centralized, and you held your money you held what you believe your money is in something else tethered to the asset, right? Mm-hmm. So if you believed Bitcoin was an asset, you would be likely to hold your money in a derivative asset of Bitcoin, and you'd be likely to price Bitcoin from that derivative asset. It would be totally normal, right? What would that look like to you? You would be comparing against gold, silver, all of these other things all the time, houses, oil, the entire works, and wondering, why is it not going up as fast as this? Why is it going up faster than this? And you'd be stuck in this time frame inside that loop of all these things where money was still broken. You still had a inflationary monetary system that had to consolidate. And all of your actions would be just Bitcoin's faster horse inside that consolidation. And if you did, you would probably take risks in ETFs. You would take risks in everything else because you would be still pricing from within the construct you've always lived in. Now, another explanation, and this is where I am. Bitcoin is a protocol. And what you're measuring as Bitcoin is just layer one of a protocol, right? And so what you're measuring as Bitcoin and the store of value is just the first layer. It's an energy-backed protocol that's decentralized and secure. And one thing we know about protocols is they come in layers and they offer more functionality in layers, and they're winner take all. So if you explore that from a different frame of reference, the frame of reference that I'm in, now you could question this frame of reference. You should question this frame of reference, but if you explored it from that frame of reference and you looked at another protocol like the internet, the beginning of the internet came, I'm going to simplify it a bit for your listeners, but it came at the beginning, TCP/IP, right, which was developed by DARPA in the late 60s. And I just simplified that take, but that was the first layer, the transport control protocol. And it was, it was so you could keep communication up in a nuclear holocaust. And it was so narrow that you couldn't do anything else. It was just that. But because it was open and anybody could build to it, it came in layers. And what you know of the internet today, what's driving this Riverside that you're on today, that we're on today, is on top of HTTP, that's just 4 layers on top of TCP/IP, that wasn't invented until 1989. And so the internet and all of the mistakes, even from 1989 to today, that people built on top of it, is the same fundamental stack that came in layers, and the same path to get there had all of the same, I'm going to build my own internet, I'm going to build my own this, I'm going to build my own control system. But the open protocol took everything. One internet. If you want to use that internet in China, North Korea, anything else, and if you have a VPN, you can see the entire internet. Winner take all, not winner take most. And protocols are very different than technologies or assets. If you view it as a protocol, and you knew that why they're so mistaken is because in the narrow time frame where Bitcoin is when you're measuring it, it can only do this narrow thing and it can't scale. That would feel right for the time. So if you took a Bitcoin from 2009 to 2020, you really didn't have payments on top. And then that would have this explosion of people who would try to say, Bitcoin isn't good enough. I'm going to do something else, right? Because it can't do this. And then you'd have this different group of people that would be building on top of it, and it would be clunky. It wouldn't work. It wouldn't, and then it would be ossify. And then on top, you'd have a payment layer. That payment layer today is Lightning, Liquid, Arc, Spark, a bunch of others. That now it's moving. It's not just an asset. It's a monetary network, and it's moving and it's expanding crazy across the world. We're investing in companies that are growing so fast, and they couldn't grow that fast unless the money was being moved in Bitcoin.
Central banks are still wrestling with inflation. The Federal Reserve keeps markets on edge with every rate decision. One speech, one dot plot shift, and trillions reprice overnight. Liquidity tightens, risk assets suffer. Liquidity expands, everything breathes again. Meanwhile, sovereign debt levels are exploding globally. Governments are borrowing at historic levels just to keep systems running. Bond markets are flashing warning signs, yields spike, currencies wobble, and suddenly safe assets don't feel so safe. But here's the twist. Traditional markets are propped up by policy decisions. Stock valuations hinge on interest rates, real estate depends on credit expansion, the entire financial system is plugged into central bank life support. According to Booth, Bitcoin isn't plugged into that. It reacts to liquidity cycles, yes, but it isn't controlled by a committee. No earnings report. No bailout. No emergency rate cut. So maybe this bearish phase isn't just about price. Maybe it's pressure from a tightening global system squeezing everything speculative. Let's watch more clips from the interview.
So what ends up happening? What is the thing that's driving you inside the other system? And Michael, but each one of us has to ask, why are we still in it? Why are we spending in it? Why are we everything else and blaming other people? If this other thing is true, wouldn't we want to move our time, energy, and everything else to create value in the new system? So it can't be other people, it's us. Mm-hmm. And each person along that journey, we think Bitcoin is, okay, you're either a Bitcoiner or you're not a Bitcoiner. But the truth is most Bitcoiners are still caught measuring the system in the old way. And so all they're really saying is, I'm going to make more money than all those other stupid people, right? And so if you were in Venezuela and you held the US dollar rather than Venezuelan currency, you would escape the massive devaluation of the Venezuelan currency, and you would look like you were so much smarter than the other people. But what if you built a business in the US currency and were adding more US all the time by providing value? You would look crazy better than the person just holding the currency because you were providing value in that. Now, what is Bitcoin? Bitcoin is this new thing that is not just the asset, it's protocol. So it is the currency. So what if everybody today lived in Venezuela? They just don't know it. It's a relative debasement. And you were building value in something that couldn't be taken. Now, the governments, of course, would say, that's dangerous. You shouldn't do that. We're going to tax the unrealized gains. We're going to do all of these things. And that system would turn into more and more of a surveillance state where you feeding that surveillance state, thinking it's somebody else or yelling at the person. Where did they get their power at the top? From you yelling at them, right? Because all your transactions are inside that system. For people that truly knew they were outside of it, what would they do? They would build the layers on top of Bitcoin to provide the exit ramp in privacy, security, everything else. And they would denominate their balance sheets in Bitcoin, and they would be invisible to the surveillance state. That's what's happening. And while most people don't believe that that's happening yet, because they're still caught in a paradigm where if it's an asset and the base layer, people can find you and so that system you're talking about, I would say 99.9% of humans still live in, and probably still about 80% of Bitcoiners still live in. They don't realize they're part of the control system yet. Still, they haven't changed anything. But there's so many people that have already realized it and are transacting in a different system and are building privacy layer onto this and building the fundamental layers on top, that they're truly in a different paradigm. That's the paradigm I'm talking from. And the paradigm, and your first question about price, I don't care one iota. If you saw what I see every day and the people that are building this and what the abundance looks like and the circular economies around the world that are exploding and the amount of transactions that are moving here, the last thing you would care about is price in the piece of paper. So when people ask that question, at least for me, because I'm not in that paradigm anymore, But I understand I was, when I first understood Bitcoin, I was measuring it in the piece of paper. And we think, and I'm not saying I'm better, I'm just further along on a journey, trying to disprove that journey and then deciding which system I want to pay my attention to, knowing that the existing system has to co-opt all my attention and it comes from me. If you moved to a different country, the initial move for a different country in a different currency would be constantly measuring in euro and the new currency, right? And that would be hard on your brain because you'd be creating a mental change back and forth to that new currency, but you'd be comparing it to what you'd always known. But if I moved from Canada to the US and said Canadian dollars 70 cents US or something like that, and US dollars, so the US dollar stronger, then everything would appear more expensive in the US to me. And I'd be making that, I can't pay for that but it's just a relative frame of reference. And so what you're talking about, and same thing in Bitcoin, is a different frame of reference that is repricing the world. And that mental calculation going from what you value the world from, a piece of paper that you know is just an arbitrary value that is based on manipulation, isn't saying anything about Bitcoin. It's saying something about you. And that creates that cognitive dissonance because we don't want it to be us. I need to make more money because all my stuff is inside that piece of paper. So I'm going to make more money. I'm going to convert some of it to Bitcoin, and I'm going to and I'm going to be caught in this cycle and everything else. But as you move more and more in the foundational currency, and that might look different for each different person, but I'll say in ego death, right? In our venture firm, I know it's way higher than this, but the rate of return of Bitcoin against the existing system is a 40 to 45% IRR. So but just by holding Bitcoin in self-custody against the existing system, you can achieve a 40 to 45% IRR. Where would you invest? I certainly wouldn't invest anything under 40. So that's the risk-free rate of the world. And you don't have to even operate in it. You just have to hold it. We see this fiat mindset and all of the stuff that you would be saying. These are stupid valuations. And I actually like, so Raoul Paul was probably, and he'll talk about blockchain and crypto and nonsense and everything else. And that takes a frame of reference. It has to be another coin. And here's what I'm going to do. And I might tether that to Bitcoin. Right. And these valuations are exploding because they're all fiat mindsets. Bitcoin doesn't need another, when I say protocol, I mean, it comes in layers and it doesn't need another coin. It already has privacy embedded in it on layer 3. It already has Lightning. These are, and you could go on and you could build onto Nostr, Bitcoin, Lightning, Fediment, zero cost, and create whatever you want with zero cost. And that open network is exploding. And what's happening over in what you're seeing in venture, in fiat venture, is a whole bunch of people trying to take it back in their centralized control coin that they tell the world is going to, and what you're seeing and why when you said 99.9% of it, and because we see it all too, it's just ludicrous. Mm-hmm. If you do it foundation, it's so outrageous, but people keep on spending these monies at these crazy valuations with no idea foundationally where it goes. And all of these things that we've seen, all of them, it is really my belief system of a control system that you live in. And Bitcoin doesn't care. It's decentralized, it's secure. There's no throat to choke. So you have two different versions of reality emerging, and the one based on energy and truth and is just repricing everything else. And the money that's going into the other stuff has already gone to money heaven.
Bitcoin is once again dancing around key liquidity zones, with traders eyeing $64,500 as the next potential magnet if support gives way. After a week of downward pressure, the price is ranging between roughly $71,400 on the high end and the mid-$64,000 on the low end. Short-term structure shows a brief push higher could sweep liquidity near $72,200 to $74,000 before a deeper move unfolds. The $68,000 level sits at the center of this battle, hold it, and bulls buy time, lose it cleanly, and the path to $64,000 opens up quickly. But zoom out and the picture changes. As Jeff Booth has argued, most people still measure Bitcoin within the old fiat framework. So every dip feels like danger, every breakout like salvation. In reality, these liquidity hunts and channel formations are surface-level noise inside a much larger repricing. The dollar looks stable only because it is the unit we are used to. Against Bitcoin, that stability quietly erodes over time. So yes, traders will watch range highs and stacked liquidity. They will short breakdowns and buy reversals. That game will continue. But beneath the charts, a deeper shift is unfolding. Bitcoin is not just testing $68,000 or $64,000. It is testing whether people continue to measure value in a shrinking unit or start thinking in a harder one. Price swings decide trades. Paradigm shifts decide wealth. As we wrap up, if $64,000 gets tested, is that fear for you or an opportunity? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.